Today we're going to look at a question for cash flow, and it would also involve some calculations for fixed assets. Let's look at the question itself. 5.1, we've got to calculate the missing amounts, A to C, on the fixed asset note. There's the fixed asset note. Or they give me some of the information, but they left out certain ones. Let's just look at buildings for now, because A is the additions for buildings that we need to calculate. They give me the carrying value at the beginning. Now I know with buildings there's no accumulated depreciation, so that carrying value is also the cost value, and the same would apply at the end. But let's see what else they tell us about the new building. Number 2, or the second bullet, just tells me extensions to the building were completed on the 31st of August 2016. No amount. So I cannot use or cannot find any amount in the information. I must use the figures that they give me in the note itself. Now, if I've got to know the layout of the note or the workings of the note very well. If I look at a note, it normally has a total column as well, where we would simply add whatever the carrying value for buildings and equipment get to a value at the end. So the same would go to the carrying value at the end. If I add a total, it means it's the buildings plus equipment. So if I've got a carrying value at the end, the carrying value for buildings would simply be the total minus equipment. So let's just go at the list of figures from the financial statements. And there I've got fixed assets carrying value at the end, 4934450. So if I take the total, 4934450, minus the equipment of 1058520, it will give me the carrying value at the end for buildings. So let's work that out first. Let me just take that out. So the carrying value in total from the list of the balances from the financial statement was 4934450, and the total for equipment was 1058520. So if I work out that difference, that would be my carrying value for land and buildings. Still not what I'm looking for, but now I've got this figure, the carrying value for land and buildings at the end. There's no depreciation for land and buildings, so whatever the carrying value is also the cost. So the additions at cost would simply be the difference between the carrying value at the end and the carrying value at the beginning. Because to get to the end, I've got to take whatever I had at the beginning, plus whatever additions minus any disposals will give me the carrying value at the end. I haven't got disposals, so that plus something gives me that value. So to work back to get to the missing one, I simply take the total and minus that figure. So the total of 3875930 minus 2866990 will give me the additions. So from that, I must simply minus the carrying value at the beginning, 2866990, and that gives me the additions for the year. And that is 1,008,940. So now we can move on to number B. Be careful. B I've got to do before I do C. There's a reason for that. So let's first do the calculation of depreciation. The last point there tells me that they use 20% on the diminishing balance. Very important. Now when I do depreciation, I split it into 3 groups. The old, excluding sold, and then the sold and the new. And if it's diminishing balance, I need the cost minus the accumulated depreciation. So I must go and look for figures to do this calculation. Before I do that, let's me just make sure what they tell us about the equipment that was sold. It was sold on the 28th of February 2017. Now, if I look at my year end, it is 28 February. So what this means is they sold the old equipment on the very last day of the month. The big reason for splitting the depreciation between old and then take out the sold and do the sold separately is because the sold was normally done somewhere during the year, and it wasn't you couldn't use 12 months depreciation, only the number of months that we had the item for. So in this specific case, it was done on the end of the year. So it would be for 12 months. So we can use it combined with the old and calculate the sold as well. So we can simply use the figures for old, and that would include sold. So I don't have to split the two. The only reason is because the sold was for a full year. So if I look at the diminishing balance, it is cost minus accumulated, and it's already given there. I've got the cost minus accumulated, and that gives me 1126,400. So I must simply take 1126,400 and multiply that by the percentage, which is 20%. But let's just write them down over here again. So the cost was 2,200,000 minus the accumulated was 1,073,600. 1,073,600. And that difference is 1126,400. 1126,400, which I must multiply by 20%. And that will give me the depreciation for the old and the new, the sold, the old and the sold. So 1126,400 times 20% gives me 225,280. So that includes the sold. So in this specific example, I don't have to do the sold then because it's already in there. I did not exclude it. The new, the cost for the new, there it is, 300,000. That I must multiply by 20%. With new, there won't be accumulated depreciation yet, so I simply take whatever the figure is, or the cost is, multiplied by the percentage, but very important. With new, it would normally be that they bought it sometime during the month, a year. So, and here they tell me it was purchased on the 1st of June. My year end, 28 February. So I had it from the 1st of June till the 28th of February. So I had it for June, July, August, September, October, November, December, January, February, 9 months. So I must work out depreciation for 9 months. It's just right there. It was just for 9 months. So it means it's the 300,000 times 20%, but then also times 9 over 12, times 9 divided by 12, and that will then give me the depreciation for the new, and that is 45,000. So now I can simply add the old and the sold, which is together, plus the new to get to a total depreciation. That is 270,280. So I must just go and show what I did in my calculations. So for equipment, what did I do? For the old, I took the 1126,400 and I multiplied that by 20%, which was the old, and the Sold. And that gave me 225,280. Just make it nice. 225,280. For the new, I took the 300,000. I multiplied that by 20%, but I also multiplied by 9 divided by 12. And that gave me the 45,000. So I added the 45 and the 225,280, and that gave me the total depreciation of 270,280. Good, so we're going to move on to number C in part 2.